I've done this video many times here just recently. I still find a lot of people who are asking me questions about this bond buyback and how it is that this liquidity crisis is going to unfold and what that's going to look like. And this is a very difficult question to really answer because nobody knows exactly how this liquidity crisis is really going to manifest itself as far as like crashing companies or bond markets or just financial markets in general. There's all kinds of questions that are going to be, out there as far as what this is going to look like, but nobody can really tell what it's going to look like until it actually happens because it's always going to look a little different. But you have to think like the bond market itself, when it comes to the US Treasuries, this is like probably the most critical market in the entire like economy out there, is when it comes to the US Treasuries remaining liquid. And what that means is that if somebody goes to try and sell a bond, there has to be a buyer out there, right? And now what I mean by that is like an individual who owns a bond wants to sell that bond. If they go to put it out there for sale, it has to be an instantaneous sell, right? If they put it out there, there's a buyer right away and it's liquid. If they have to wait, that means it's not liquid, right? Even if they have to wait a day or two or whatever, that's the liquidity issues that are taking place within the bond market. So when it comes to the treasuries, they're almost instantaneously liquidable, right? Liquidable, meaning that you can sell it to anybody at just about any time, right? I mean, there's like no questions about it. However, there are questions coming about whether or not that's going to always be the case, right? And this is where the Treasury is really stepping up. So now you think about it, like, what does this bonds really mean? Like some people I've heard say like, well, they'll just default on the bonds, no big deal. Well, they'll just like, just not pay it and then everybody will just be screwed. It doesn't work like that. Like these bonds have to be paid. US Treasuries can never have the impression that they are in default or that they are not going to pay. If that was to take place, it would have devastating consequences to not only the United States, but to corporations and insurance companies, retirement plans, and everybody out there. Okay? This is very important to understand that these bonds have to remain liquid. Okay, so now when it comes to the US Treasury, they are stepping up plans to buy back their own bonds to make sure that the market stays liquid. Meaning that if somebody comes up to sell that, they are going to be there. Now, this is a very interesting thing to think about because really the US Treasury has only done this a couple of times in their history. They did it like 20 years ago and then they did it back in like the 20s. So this is a very rare circumstance that they are going into. And we have to really consider what it is that has taken place out there because it's not like what a lot of people would anticipate during a time of liquidity issues within the bond market. The Federal Reserve would step up and start buying those bonds. But they're not going to be there because they're in quantitative tightening. And they plan on unwinding their balance sheet for the rest of the year. See, as much as people looked at the Federal Reserve back at the end of the year and said, okay, they've made their pivot. They are now in a dovish position. They are going to be lowering interest rates into the future. This was a set in stone statement that everybody was considering now part of their strategies, that the Federal Reserve is going to be lowering interest rates. And with that assumption, people thought that they would be moving back into a quantitative easing or some sort, being the buyer of these treasuries. That's not the case. They're not going to be there. And the Treasury knows this, and they've been planning this for years. This isn't like something that they had just come up with. We've been doing videos about this for over probably close to a year now, talking about how the Treasury has been planning for this exact time. They knew that there was going to come a moment in which that there was not going to be enough money in the system to make sure, or enough money in the system to keep that bond market liquid, and that they are going to make sure that they are there to do it. All right? See, they see this coming. They knew that quantitative tightening would eventually show itself up in the bond market. And when it does, they're going to be there saying, no, you're not going to go illiquid. You're not going to be in a position in which that the bond prices start falling and the yields start rising dramatically. The Treasury is going to be there. And now you can tell that they are getting prepared for this if you just go and look at the Treasury general account. Now, the Treasury General Account is an account at the Federal Reserve that the Treasury has to pay its bills with. So, like, if they're issuing out Social Security checks or whatever, it's coming out of the Treasury General Account. Now, if you look at this particular account, I left a link down in the description of this video, you can see that they are sitting on a lot of money. Way more than that they ever would typically have in their history. There's only been 2 times that they had as much money as they do now. That was during the times and during the pandemic in which that they were conducting themselves in the stimulus fashion, right? They needed all this money to issue out all the stimulus checks. But they're not going into a stimulus program right now, but they're sitting on about as much cash as if they needed to. Pretty interesting to think about. Why is it that they would be sitting on all this cash unless they plan on going into some sort of stimulus? Well, maybe it's so that they can keep that bond market liquid. And see, now with this credible threat, with the amount of cash that they have sitting in the Treasury General Account, with the statement that they are planning on doing this bond buyback program, the fact that they are there is going to bring in the market's willing participants. See, the people who would typically be there to buy the bonds and to keep that market liquid, if they get nervous and start backing out, then that's going to create the liquidity issues. However, if the Treasury Department can convince them and give them the confidence that they are going to be there, give these market participants the confidence that the Treasury will be there to back them up, then just that information alone, before the Treasury even does anything, just that statement, just the idea alone, ought to bring in the willing market participants to keep that bond market liquid. And the Treasury probably won't have to do anything at all, except for to make sure that they establish and maintain that credible threat. And this is what they're doing right now. They're establishing the credible threat. So again, like, I don't know how else to explain it. If you're not familiar with the bonds, what a government bond is or a U.S. Treasury is, that's probably a good place to start. Like, if you're not familiar with how the U.S. government, funds itself, then it's probably a good idea to start there, because if you can't understand what a bond is, then you're probably not going to understand how the bond buybacks are going to work and how the economy is going to essentially incorporate this information into their daily lives. Right? Because everybody is always focused in on what the Federal Reserve is going to do, but hardly anybody ever thinks about what it is that the Treasury can do if they ever came into a situation in which that the bond prices really started to fall and the yields started to rise. See, this would be very devastating to the United States government, but if they are in a position in which that they can prevent that from happening, which they are now, then you can tell that there is probably going to be some sort of system that is going to be taking place that people are not accustomed to. All right? And this is why I always put it out there that we don't understand or know the tools that they can deploy, that they have held up, locked up in secret, waiting for that moment of unusual and exigent circumstances. If we ever came into a position in which that the financial markets were freezing up and we were running into liquidity issues within the bond market, they have all kinds of stuff that they can deploy that we have never even heard of. I mean, they talk about, the tools in case of an emergency, but they don't talk about what those tools are, and they don't specify what they are. See, this is why things like the Bank Term Funding Program, when they get launched out there, people are really amazed by it, saying, oh, look at what they're doing. They're bailing out the banking system, but they had that plan already in place. They just didn't tell anybody about it, because if they did, you would incorporate that into your strategy. See, they don't do it like that. We're going to run into some tough times this summer, guys. I mean, there's very little doubt in my mind that there is going to be a liquidity crunch coming. Now, how devastating and how bad that is to the financial markets, to the individual lives that we live, to our businesses, to, all that stuff, that is an open question that nobody really could give you an answer to. But the idea that there's liquidity issues coming is definitely, manifesting itself and showing itself here in the mainstream medias, and, just the actions that these banks are taking, that the actions that the Treasury has taken. I mean, why wouldn't they tell people about this? Right? Why wouldn't they explain why it is that they have this much money sitting in the Treasury General Account? They can make up all kinds of excuses, in case they need it for emergency purposes, but they just went and took out a bunch of debt, and people are all complaining about how much debt that the United States has just issued here just recently, but hardly anybody's talking about the insane amount of cash that they're sitting on right now. Okay? And the reasonings why they would be sitting on that much cash. Never have they had this much cash unless they were trying to deal with, a pandemic of some sort. That was the reasons why they had it before. So now we know that there's issues coming. We can see it within their own actions, their statements, their planning, everything. But if they were to inform everybody on a mass scale, then people would panic and freak out. Okay? This is why it's important to understand this stuff for ourselves before that happens. All right, 10 minutes into it, we got 306 people watching with 44 likes. Thank you so much for hitting that like button. I know this is kind of a review of videos that I've done just recently again, but so many questions are coming up. I think that the conversation needs to continue until we can really fully understand what it is that we need to do with this information, because personally, I'm looking at it as like, man, there is going to be buying opportunities coming into the future if you're sitting on cash. Because during a liquidity crisis, man, people will be selling off assets like you wouldn't believe in order to acquire the cash that they need to pay their debts. See, this is the problem. It's like, if you can imagine, like, just imagine like a supply-demand balance, just like anything else, right? So here you have all this debt that needs to be paid, and you have a supply of dollars out there to pay the debt, and all of a sudden the supply of dollars diminishes, and there's too much debt comparatively to the amount of dollars to pay it off. And see, now this is where a lot of people end up losing it, because they look at like inflation and say, no, there's too many dollars out there already chasing the goods and services. That's the problem. No, there's not enough dollars to pay off all the existing debt. That's the major problem that we have, right? And at some point, it's going to get noticed. It's like a teeter-totter, right? Everything's cool until all of a sudden, boom, there's not enough money to pay off the debt, and now these debts are starting to default. And the people who hold those debts are going to panic, trying to figure out how it is that they can acquire the dollars they need to pay their debts so they don't lose their entire livelihood. Right? And this is where assets end up coming up for sale for a very cheap price so that those people can acquire those dollars to pay their debts off. This is the liquidity crisis unfolding. Right? We're starting to see it happen. Right? It's just the very beginnings of it. And how, where it shows up and how bad it gets, I mean, that's anybody's guess. All right, 355 people with 62 likes. Go hit that like button. Let's see if we can get it up to 200 likes before we end this live stream, which should happen in the next 15 minutes or so. I kind of got a late start on today's video. Do you believe we are entering a phase of fiscal dominance? Well, I think like the fiscal aspect to stimulating the economy is now a given. Like, okay, you got to think like until we can actually remove cash out of the system and go into a negative interest rates, until the banking system can figure out how to do that, then there's really no way that the monetary policy is going to be an effective tool for stimulating the economy by lowering of interest rates. Like I've said this so many times now, that is no longer an effective tool. The Federal Reserve knows it too, right? Like they can't, like adjusting interest rates, this is like, it doesn't work anymore. The idea of adjusting interest rates does work, right? And that's the important thing to remember about this. I mean, if you follow me on my channel, you've heard me say this a bunch of times, so this isn't new. But the actual adjustment of interest rates is no longer an effective tool. Think about it, like the neutral interest rate is too close to zero. Even though they have the Fed funds rate up around 5%, dropping the Fed funds rates far enough below the neutral interest rate to stimulate the economy is not an effective tool. The neutral interest rate is too close to the lower bound of zero. But the idea of them doing it has the same effect. So if they can put the narrative out there, put the idea that they are going to be lowering interest rates going into the future, that is the monetary policy coming from the Federal Reserve. Just that idea of them lowering interest rates then sparks the people out there to start behaving in a way as if the interest rates had fallen. However, it won't be enough. That's where the quantitative easings and all the other stuff, the stimulus programs that come in from the Federal Reserve and their, recessionary tool pressures or recessionary combating tool pressures or whatever you want to describe it as. This is how people kind of typically would look at it. Now they know, right, that before Before all this crap went down with the lower interest rates to lower bound, with the neutral interest rate being close to zero, before all that, the lowering of interest rates would work. The people would go out there, borrow money, buy houses, cars, go on vacation. It totally worked, this lowering of interest rates. It doesn't work anymore. However, somebody needs to go and borrow the money and start spending it into the economy. And if we don't do it, who will? Right? That's where the fiscal stimulus starts to come in. This is where the government starts doing all the spending. This is something that they had talked about prior to the last recession, prior to the pandemic. They even said it. During the next downturn, it's going to take fiscal policy to stimulate the economy because the people won't do it. The people will not borrow enough. They will not spend enough. They will do some, but it's not going to be enough. And so it took the government spending in order to make it happen. Now, is that going to be the case the next time we go into a downturn? Probably, right? That's probably going to end up being the case again. Now, if there was a situation, right, in which that we move into a recessionary period, but the cashless society is now been implemented, we have a digital currency, and the interest rates have the ability to go into negative territory, then that might be different. Then it may not take the fiscal policy stimulus, right? It may not take the government doing all this spending in order to stimulate the economy. It could move back into the people again, borrowing money to buy houses and cars and go on vacation again. But right now, that's not really set up within the financial system just simply because we have so much cash. And if you have the ability to pull cash out and hide it under the mattress, then that's exactly what you will do, as opposed to taking a negative interest rate on your savings accounts or bank accounts, right? Because at least if you have cash, it may not have an interest to it, but at least it doesn't have a negative interest rate to it like you would have inside of a bank account. So this is why it's probably going to end up taking more fiscal policy in order to stimulate the economy again, unless we happen to be in that cashless society with a digital currency component to it. There's never been enough dollars, Simon. No, you're right. I agree. There's never been enough. There's the perception that there's enough. Trump graduated from Penn in 1968 with a Bachelor of Science in Economics from the Wharton School. They called Wharton School of Finance. Yeah, I wouldn't trust him. I wouldn't trust Trump. I would trust Trump if it was a personal conversation that I was having with him, but I would not trust anything that he is putting out there for the people to hear. Remember, this is the same guy who wanted to fire Jerome Powell, take interest rates in the negative territory, and fire up the printing press. He said this straight up before he left office. The Fed should be going into negative territory and printing money. There is no inflation. All right? So this is what Trump was wanting. This is what he said. Right? Like Germany was doing the right thing by having a negative interest rate. Whether Trump was right or wrong, I don't agree with that, right? I don't think that would have been the right move. Now, at the time, I understand what it was that he was doing because he was actually working in cahoots with the Federal Reserve. See, a lot of people say that they weren't working together. That's not true. They were working very much together to try and put out the idea that the inflation had fallen dramatically. They were trying to raise the real interest rates at the time. And this is very difficult to understand, but if you can lower the inflation expectation, you will raise the real interest rates. That was the whole point of what Trump was saying back then, blasting it out all over the media, saying that there should be, negative interest rates and the Federal Reserve should be printing money and that there's no inflation. That was just the whole idea of that statement out there, was to lower the inflation expectation and raise the real interest rates, and it totally worked. I do not believe that Trump actually wanted to have negative interest rates and actually have the Federal Reserve printing money. But I do believe that he wanted the people to believe it, to lower the inflation expectation and raise the real interest rates, because that's what it did. That's what it did. All right. Look what happened to Japan for holding rates negative for so long. Yeah, but Japan also isn't a world reserve currency like the United States dollar is. I mean, they do hold like some reserve currency status, but not nearly what the dollar is, you know. All right. Put it all in physical gold, sell enough to pay your monthly bills. Um, all right. Simon, thoughts on yen's action last night? I don't know. I didn't even look. Japan's currency crashed. Did it crash? I didn't even, to be honest with you guys, I got up this morning. I was like, you know, called bingo late last night, so I really haven't had a whole lot of chance to even look through articles or anything else. Yeah. All right. But I guess I'll check that out and maybe do a video on it tonight. All right. What kind of car do you have? Looks like a Ford. Yeah, it's a 99 Ford Ranger. All right. Buying opportunities for which assets? Well, I don't know. You got to, you know, it's going to be hard to say which assets are going to be there until they come up for sale. All I know is that when you look out there and you see the buying opportunities, generally you're going to have the cash on hand at that time. Now, when people say like, what kind of buying opportunity, what kind of asset? And I was just like, I don't know. Like there might be a house that comes up for sale. There might be, you know, somebody's business that they're liquidating that you can get all their equipment or something like that. Like, I mean, there is all kinds of stuff out there. Maybe not just what you would typically see as far as like a generic asset that you would buy like on the internet or something like that anybody would have access to. Hey, Mike, what's happening, man? You know, it may not be like that. It might be something like, you know, just a personal view that you see out there that you might have access to. All right. Is that a four-door Ranger with the six-banger? No, it's a four-door Ford Explorer with the six-banger. All right. Why nobody's blaming this old guy? All right, I will say this in Detroit, boats are the first thing to go, and they are starting to hit the market. The bigger ones too. They aren't asking a lot now. I bet them beg people to take them soon. Yeah, and see, this is the thing. You're gonna find like all those luxury items. Think about it, like what it is that separates the rich from the poor is the dive into luxury items. So when the rich start to become poor, what are they doing? They're getting out of their luxury items, right? And now if you're already poor, then generally like you don't like recessions really don't hit you as hard. I mean, unless you have a job that you lose, then it's pretty bad. But it's not like you're watching your portfolio shrink and your assets deplete and you know your incomes fall. Like, you know, when you're poor, you don't have any of that stuff. Like you got your 9 to 5 job and your daily like grind and that's it. And so long as you have your 9 to 5 job and your daily grind, there's really no difference inside of your life, right? But if you're rich, well, now you're having problems because you're watching your richness go away, right? You know, all the things that you have ever worked for and accumulated and thought you have permanently in your life are now losing value dramatically. You're trying to unload them so you don't lose any more value because you had this idea that, you know, it was just like all this $1 million worth of stuff, but now it's only worth $500,000 and you got $750,000 worth of debt out there and you're pulling your hair out trying to figure out what's going on. That's a whole different situation to be in, right? And when somebody is in that situation, they end up getting desperate. So if they have went and bought a bunch of toys that they really didn't need, a bunch of luxury items or something, they're going to unload out of those luxury items like right now. They'll dump them so that they can maintain the necessities of their life, like their house payment or their car payment or something of that nature. But they'll unload like the four-wheelers and the surfboards and the guitars and all the other stuff that they had, and they'll probably sell them fairly cheaply because they don't even care about them anymore. They just need the money so that they can continue on with their way of life. And that's the panic situation that I think a lot of people will end up facing soon. All right, I got another minute or so here, guys. Uneducated Economist. The wife got laid off last week. Any way I can be prepared for the rest of 2024 with us on one income? Man, I don't know how to tell you what to do, man, because that's not a good, easy place to be in, especially if you're accustomed to that one income. I don't know, cut your expenses and try and find more income. That's like, you know, for me personally, like I don't rely 100% on everything that I got. Like if I lose my job If I lose YouTube, if I lose my side hustles, if I lose all this stuff, I'm like, I'm not necessarily prepared for it, but I'm kind of almost expecting that to be the case or something like that happening. And although it would be quite devastating, I'm not like, I wouldn't be in a position going, oh crap, what do I do? Right? Because I've already thought about what it is that I would be doing. Right? I've already kind of mentally prepared myself and physically prepared myself and financially prepared myself for some situation like that to happen. And one of those things that I don't do is be a wishful thinker in believing that this is going to continue on forever, like my job, you know, making payments on a debt. I don't want that in my life, right? I could do it. I could go out and buy the new car and the Camaro and have that in my life, but then that would be that much more stressful if I was to lose some income, if my wife lost her job, if I was to lose my job, right? All of a sudden now you got these burdens on your life that you probably didn't need to begin with, but during the times when they were good, you went ahead and did it thinking that this would last forever, but it doesn't. It never does. Right? And so, I don't know what to say other than there's a lot of places out there that you can hustle some money from and just start figuring it out. Even if you work all day to figure out how it is that you can make $1, if you can make $1, you can make 2 and you can make 4 and you can make 8, right? And it really is that simple once you understand how it is that you can go about getting, earning some sort of income, especially if you can earn income that is passive. Like you put out a little bit of effort and then you sit back there and watch it come in, right? Much like making a YouTube video or something like that. If you can figure out some sort of passive income and work towards things like that, that's what I would do, right? Even if you have things going on right now and you're perfectly secure with everything and your finances and your income and everything, I would still do that. I would still figure out a way to come up with some sort of way of doing passive income, if nothing else for a fun hobby. Right? Because even if you don't need it, if you're just doing it for fun and for a hobby, you will pick up the skills that you need in order to do it in case you really do need to do it. All right, what time is it? Okay, guys, I really got to go. I got like 3 minutes left and I got to go back to work. All right, be born rich, easiest way to get rich. Yeah, that's for sure. All right. Hey, UE, what are your thoughts on the housing market? I mean, I've done quite a few videos on the housing market and a lot of people want to disagree with me on it, but ultimately what it comes down to and the things that I am looking at is supply and demand, right? There is a lot of people out there who want to buy a house, right? Now, whether they can afford it or not, that's a different story, right? Just the idea that they want a house is the demand. The supply is very limited. And when you think about where the supply comes from, it's going to come from 2 places. Either 1, people selling houses, or 2, people building houses. Right now, there's not a lot of people who want to sell a house, right? They don't want to get out of their low interest rate, and they certainly don't want to take on a higher interest rate. So the people who were flipping houses back in the day are now sitting tight and waiting. Right? Waiting for that opportunity that it might be more cost effective for them to either move up into a different house, sell this house, downgrade, or at least take on a different loan. People are still sitting tight waiting for that opportunity. The home builders are not excited about building homes right now. I mean, although the environment is definitely moving into a position in which that it would seem more logical for them to build homes, the home buyer traffic has them very much worried. And if a home builder is worried about whether or not that they were going to be able to sell the house that they are anticipating for the price that they started it, right? And like, if I could build a house and sell it for this price, but by the time it's completed, they don't get that price for it. If they are worried about that being the condition, then most likely they're not going to start new projects. And this is what we're experiencing today. So as long as you have the supply-demand imbalance, right, you're going to keep prices elevated on the homes. Interest rates being elevated has not destroyed the housing market like a lot of people thought it was. Even if it comes to a foreclosure, a wave of foreclosures, we have to think, man, unemployment has to rise fairly significantly. Those foreclosures then have to go into process, and then it takes time for that to occur. So even if you were to have unemployment rise today dramatically in a fashion that would create a foreclosure wave, then you have time before that actually starts to occur. And how far down the road before we actually see those foreclosures coming to inventory, right? And then by that time, where will the Federal Reserve be with interest rates and mortgage rates by that time? What would they be? Who knows, right? Big question. Right now, limited inventory and high prices. And I don't see where that's changing. Okay, guys, thank you so much for being here. I really appreciate all the thumbs up. We have 474 people watching with 153 likes. Thank you so much for hitting that like button. Let's see here. Get your funky asses invested in concrete. All right. Have an awesome week. Eat healthy. Yes, absolutely. All right. You guys are awesome. Thank you very much for being here. Uneducated Economist. You let me know. All Nighter says, thanks, Simon and everyone. Yeah, thank you all for being here.